G'day everyone, welcome back to Wrist Biscuits. I'm Michael, your host. Thanks for joining the show once again. Look, as always, your support for the show is appreciated. So if you enjoy the show and the content and the interviews that we're doing, please follow, subscribe, like, comment, all those good things. Your interactions and support helps the show. Today I've got a very special guest, someone that those of you from Twitter will be familiar with, DCP Cooks. G'day mate, how are you?
I'm doing great. How are you?
Yeah, good, thanks. Thanks for coming on the show.
Oh, my pleasure. This is my first podcast, so
Oh,
I'm
wow.
breaking
Okay.
into new territory. Yeah, this is it. I'm a virgin.
Awesome. All right, let's do it. Before we get started on the sort of good bits, we'll just get some um, sort of technicalities out of the way. Oops, hang on. What have I done? Sorry. Hang on. Just a bit of a disclaimer. Obviously, this is really just for entertainment purposes. It's general in nature. It's not financial advice. DCP and I are just having a chat. If you're looking for financial advice, please go somewhere else for it. If you're just looking to listen to a couple of guys have a chat about markets and share their experience, then you're probably in the right place. Okay, so let's get into it. So, what I know about you anyway, which might be completely wrong or right, but I'll sort of, I guess, give a little bit of a background. So, you're obviously a trader. You've been trading for a number of years. Started off on the floor in the pits or something back in the day. Independent trader now. Decided to open a restaurant slash brewery and living the dream. Is that sort of a fair assessment of who you are in the world?
It is a dream and sometimes a nightmare. Um, so I'm married. Well, I was actually in high school and I dated a girl who is now my wife. Um, Her father had passed before I met her, but he was a managing director at Bear Stearns.
Okay.
And her older brother was a member on the floor at Chicago Mercantile Exchange, and he was a filling broker in the T-bill pit. So in the summer of after my freshman year in college, I asked him if he could get me a summer job working on the floor as a runner. And he's like, sure, we'll get you a job as a runner. So I went down that summer and I ran orders. In the old days, you'd go from a desk, they'd print out the order, they'd handwrite it, be a carbon copy. You'd run it to a clerk. Clerk would take it, look at it, put it into his deck, and then hand it off to the broker behind him. So the pits back in the day were clerks in the front, brokers in the back, traders in the middle, and it was a pit. It was a little Thunderdome, and I fell in love with it. I absolutely fell in love with it. So at the end of the summer, he's like, "Do you want to clerk for me?" And I'm like, well, I'm supposed to be going to college and my old man's going to be pissed. And he's like, I'm going to make you a really sweet offer. I'm going to give you $125 a week and no insurance, and you're going to be 1099. And I had no idea what any of that really meant. And I was like, well, I might be able to rent a place and get a room. I really love it. Let's try it for 2 weeks. So I had 2 weeks before school started. And so I started clerking for him. Didn't know anything about T-bills, didn't know anything about futures really per se. I just knew that it was a really amazing environment. And I saw people making thousands of dollars a day. And I was like, okay, I don't even have a real major yet. Um, I'm in.
Okay,
So I
cool.
dropped out of college. I dropped out of college. It was the fall of 1984. Um, I started clerking in the pits. Um, had to learn arbitrage, hand signals. Had to learn the basics: stop, buy, stop, sell, stop, buy order, limit order, market orders. Had to learn how to communicate, articulate, and more importantly, I had to learn how to hear the market behind me. And it took a little bit. He had one primary clerk and I was a secondary clerk. But I started to pick it up really pretty quickly. And he moved me up to the top step right behind him. And I started gunning for business, basically quoting markets to different FCMs, different commodity merchants, bankers, brokers. We picked up, he had a Merrill Lynch account, he had a discount trading account that he was filling orders for. And I struck up an odd relationship on a weird day with the guy that ran the Plaza deck, the old Solomon Brothers deck in the
Okay.
T-bill pit. So he was looking for a quote. I was there. His clerk was busy. He gave me a 100 lot order. So back in the day, Plaza paid $300 for an order, so it was a $300 bill. My boss was thrilled, and he's like, "You do nothing but watch Plaza." I'm
Okay.
like, "Okay." So I literally just sat there every day, every minute, and just watched Plaza. And I struck up a relationship with the gentleman that ran the desk, Charlie Traer, and that basically set my career on a path. Charlie took me under his wing. He taught me T-bills. He taught me the intricacies of the market. He asked me to provide him unlimited specific direct coverage. And so that's what I did. We managed that business for several years. We'll fast forward 2.5 years or so into 1986. Um, it got a little bit tighter in the T-bill pit. The Eurodollar pit was just starting to take off, and you needed a membership to really have access to the direct spot right in the pit. So they got me an IOM membership, which meant I could trade for my own personal account. It didn't take much. It was $25,000 back then, and a little seed money in the account.
Okay.
I went to my grandfather, who was a banker, and I was like, "I got a shot." He's like, "Okay, I'll put up a T-bill for you." So he pledged a T-bill. I had been saving money. I finally got some raises, and I put 5 grand in the trading account. I had a pledged T-bill. I got a blue badge. My company paid for the seat lease, which I think was about $700 at the time a month. And I started trading my own personal account. I wasn't open outcry trading. I was just handing orders back to my broker. Hey, buy me 10, buy me 5, sell me 10, sell me 5. And that worked out really well. I made some money. And they decided at that point in time, the mercantile exchange shifted from one single pit with all the customers on one side to a two-sided pit. And they needed more space. So they elongated the pit. And it was the T-bills, and then it was the Eurodollars, and then it was the options were just starting at the far end, and LIBOR was down at the far end. But it was basically the Eurodollars and the T-bills and the TED spread. So I took, they needed a broker on the other side of the pit to service Solomon Brothers, which was Plaza. So I upgraded from an IOM membership to an IMM, and now I was actually capable of executing orders in the pit. And this was August of 87.
Right.
So in August of 87, I upgraded to an IMM membership. I was filling customer orders. My primary job was to give my broker his business. But if I couldn't reach him or if there was something I could do immediately, I was able to do it. And I was also helping Solomon Brothers. I was facilitating their TED spread business as well. Um, the front month Eurodollars were further to my right as I was standing looking at my customers. And the TED spread was behind me to my left, and the T-bills were directly behind me. So I was spending time watching my customer and then trying to execute, trying to facilitate business. Um, and then we walked into the crash of 87.
Yeah.
So so I was a filling broker. trading my own personal account in the crash of '87. Um, I had a really great day on that day. I made a six-figure trade. Worked out really, really well. I had 40 T-bills on. The market was insane. I traded my account. I decided at that point in time, I had seed money, I had six figures capital. I wanted to trade my own account. So I gave notice a couple of months later, started trading my own account, and basically lost $50,000 and all my self-confidence.
Right.
Um, but I kept my seed capital, gave my grandpa's T-bill back. It was my seed capital. I put it in a savings account and I went back to clerking. I got a job working for a gentleman named Pat Mulcrone, who was one of the board of directors. He was filling Solomon Brothers business in the front month. And I said, Charlie, the guy on the desk at Plaza, was like, okay, you're taking a step back. You need to regroup. You need to learn some more. Go work for Pat. I'll tell Pat to hire you. You go negotiate your salary. It's a done deal. So I walked over, I talked to Pat, we negotiated a salary. And I worked for Pat for a year and a half. And part of my negotiations with Pat was, if this works, I want a little more seed capital. I want you to back me and put me into the pit. The Eurodollars were expanding. Pat and I did great business together for a year or two. He handed me a check for 100K, and at the end of that time frame, and said, "Go trade your personal account again." And I was literally, it was 1990. We were just going into the Gulf War. My wife was pregnant with our first kid. I had had a personal tragedy a year and a half earlier when my brother was killed in a really tragic homicide. And but for some reason, I felt this was the perfect time. And
Okay.
I went back in, and I went back into the pit in the third and fourth month Eurodollars, which was growing rapidly. And I had probably one of the best spots on the floor in that area because I knew everything about that old pit, and I knew everything about how it was reconfigured, and I had line sights to both sides of the floor, so I could see all the flow. I could see the Eurodollars in front of me. I could hear the TED spreads behind me. I knew the T-bill pit. I could hear that too. And I started trading my personal account. And I paid Pat back his 100 in about 9 months, and traded in the third and fourth month Eurodollars until 2000.
Right.
So I had a really good 10-year run, made a lot of money. Um, After that, electronic trading was coming in, Globex was coming in. They were cutting tick size. Seat prices were getting hit because of Globex. So I had purchased a seat in 1993. I bought a full membership for 765K. In 1997, I think it was trading like 520, 540. So I was kind of underwater. I had paid equity, but I was kind of underwater or break even on it. Feeling pretty nervous about it. I still had all the gem seats they gave you. Um, but I was like, this floor is gonna die. And at
Hmm.
that point in time, ZERP was really starting to take effect. Interest rates were going lower and lower and lower and lower and lower. Volatility was getting less and less and less. And I was like, I don't see a future on the floor. So where do we go from here?
Yeah.
Um, you couldn't electronic trade really yet. You could if you had a Globex, but it was a CQG machine. You were at home or you were in an office. The markets weren't moving. I didn't know the SPOOs. I didn't know NASDAQ. I really didn't want to branch out into those markets because I didn't understand them. I didn't want to put in the learning curve. And I decided, and I thought the floor was going to die. I was 8 years early, but I was right. So I decided to go off floor, and I had some people that I had met along the way, and I got an opportunity to go into mortgage-backed securities.
Okay.
So I jumped into mortgage-backed securitization, started working on a desk, Ended up after a long run, 4 or 5 years. This is 2001 through 2004. Finally got an opportunity to go work with GE in 2000 the end of 2004. So 20 years later, right after me starting my career.
Yeah.
Um, and I was responsible for GE subprime mortgage securitization and pricing,
Okay.
um, which was a great gig. It was a really nice salary, great bonus. GE was killing it. We were doing billions of dollars a month in securitization of subprime loans.
Mm.
They had purchased a subprime originator called WMC Mortgage.
Yeah, I remember
So
that.
we were facilitating that business. And life was great for like 3 years. The kids were growing old. I had a day job. I had no personal risk. Really wasn't trading my own personal money anymore. I was just letting it sit in an account. The market was ripping. So I was investing at the time. Um, and then what was it? It was June. No, it was August of 2007. And I got a phone call from corporate, and they're like, we just got kicked back $3.5 billion of subprime tranches because of payment defaults and underwriting exceptions. And we want you to go out and look at the nature of the tranches and see what you can figure out. So I went out to New York, flew out, went to one of the auctions. They had sent another 3.5 billion or so out for securitization and sale. So we had 7 billion up for sale when I went out there. And I came back with the $7.5 billion.
Yeah,
Literally
right.
all of it was getting rejected. At that point in time, the markets were getting really, really, really squirrely on the MBS side. And I'm not sure if people understand how MBS was priced back then. You'd sell a note rate. So you'd sell, let's say the going mortgage rate was 4% for a 30-year fixed. Well, at a subprime, double A, triple A tranche, that's great. Now you start getting into the A's or you get into the B's, there's a price increase for it.
Yep.
And every time you go to securitize a note, you're saying, I'm going to bring you an A loan, not a triple A. I'm going to bring you a lower tranche. It's going to have a FICO score of X. It's going to have a loan to value of Y. And we're going to price the market. The market was priced. And we're going to say, we need to make 200 bips, 300 bips, 400 bips, 500 bips, whatever it was. We're going to sell overage on the interest rate. And we're going to take that premium back from the investor, use that as our profit, and go from there. We didn't hold servicing at the time, so we were giving up the SRP on that. But so we were selling stuff, 5, 6, 700 basis points over,
Mm.
which was the equivalent of probably 2.5, 3% over a note rate. And we had a AAA rating as GE. So everyone loved our paper and they were willing to pay a premium for it. But we also had a guaranteed buyback. So the whole market went really south, really, really fast. It was, I think, the November meeting, the November auction. We probably had 18 to $22 billion kicked back. We had $10 billion on our books, on our line. So we were 30 billion upside down. We had great line of credit, so it wasn't killing us. We were making money, but now we had to start servicing our own loans. And I got called out to corporate, and the GE money guys were like, we're shutting it down. We're shutting the whole thing down. We're done. We're out. New Century had just filed BK. The market had collapsed. There was no premium. It was a greater debacle than being long treasuries coming out
Mm.
of the rate hikes that started in 2022. I mean, it was fucking carnage. Um, so I got like a 3 month. They kept me on for 3 months to clean up the books. They gave me a year severance package. And I was like, okay, now what am I going to do? So I started trading. I funded an account with a couple hundred G's and I started trading my own account and got literally destroyed. I had absolutely no idea how to screen trade ES and
Yeah. Okay.
um, you know what I mean? I had no idea. The market had completely changed. I was a floor trader. Floor traders trade by finding size, finding relationships, providing liquidity. And now I'm trying to pick spots, so I got crushed and I was like, all right, I need to take a break. So I went to culinary school. I took a
Okay.
year sabbatical, went to culinary school down in Chicago at Kendall, went out and cooked for a little bit, and then sat down and tried to figure out how to day trade.
Okay.
Tried to figure out how to be a screen trader at home with no input. Um, on the floor, there was tons of input, there was tons of feedback. You know what I mean? You could feel the noise, you could feel the emotion, you could see the fear, you could see the order flow. Um, on the trading desk at GE, we had counterparts. You could talk to people. Now I'm sitting in front of a computer screen trying to figure out how to make things work. And so I just decided to make it simple. I was like, how can I make this a simple process?
Okay.
Um, so I really went as simple as I could. I went back to some of the lessons that I learned on the floor, um, and tried to develop a new trading style. Um, that was 2011. I'll go back and fill in a couple of pieces. In 2001, when I left the floor, my wife was a Montessori teacher.
Okay.
So she didn't like the people she was working with. So I was like, let's start your own Montessori school. And
Yep.
she's like, okay, all right. So
Perfect.
we
Yeah.
started a for-profit. We started a for-profit Montessori school, and then we quickly turned it into a not-for-profit. But she's the director of that school. That's been going since 2000. So she just had, or 2001. So she just had her 22nd anniversary, I believe.
Yeah.
And we've
Nice.
got yeah, we got 7 classrooms. It's been a great career. She's really enjoyed it. Um, After I was done with culinary school, I worked at some really nice restaurants. I worked at a country club for like 9 months, 10 months, learned a whole bunch of stuff. And then my wife was complaining about the school food lunches that she was buying from another company. So I was like, well, I can do that. So we had, at this point in time, we've expanded to 4 Montessori schools, and one of the schools was an old public school. So we were paying rent, and we had an old commercial kitchen. So I hired a couple of guys, a couple of cooks, and set up a school food service catering company to
Yeah.
service the
Okay.
4 schools that we had. Um, so I had that business running, this business running. That sort of took off. Um, and then I focused more on building my day trading.
Yeah.
So now I primarily trade the ES. I traded Eurodollars until SOFR became a new thing and Eurodollars are no longer. Um, at the time, it was just getting familiar with the market, and the size and how it traded. It trades remarkably similar to the Eurodollar curve. There's really no difference, although there's fundamental differences with the contract itself.
Yeah. Okay.
Um, and then, so now I've got the school working, I've got the catering business going, and I spent the next 3 years kind of growing the school food service business. And cooking was always kind of my hobby. And I realized that I had just kind of ruined my hobby and turned it into a career.
Yeah. Okay.
So, so I'm like, okay, I need a new hobby. So I bought a book on brewing beer, and we went up to a vacation place up in Michigan. I had no internet, no TV, and I read the book and I was like, okay, I can learn how to brew beer. So I'm like, I already got pots, I already got everything I need. So I'm going to brew a batch of beer. Um, Brewed a batch of beer. There was a local store in town that specifically dealt with or addressed home brewing.
Yep.
So I went and bought some equipment, learned how to homebrew. Um, Quickly realized I needed better equipment, so I upgraded some equipment. And then I started hanging out with the guys there a little bit after the markets would close and I was done with the school thing. And ultimately the guy's like, the owner of the shop's like, you gotta start a homebrew club. I need to build a base of people that I can sell ingredients and equipment to. And I'm like, I don't know if I want to do that. He's like, I'll give you a good deal on equipment. I'm like, okay. So we put up a poster, a flyer, join a homebrew club, and I met my business partner
Okay.
for the brewery. So that was in 2016. Yeah, 2016, 2017, something like that. We became friends. Super smart guy, Illinois grad, MBA from DePaul, business and marketing degree, young kid, um, young family, lives next town over. Um, so we started working on business plans. We started working on how do we organize this? How do we structure this? What kind of LLCs do we want to do? Went down that entire path. The entire time, I'm basically just long the market. I'm just investing. There's nothing really going on in 2016,
Yeah.
2017, 20. It's just the market's going up. There was a little bit of volatility when Trump got elected, but I was like, well, he's going to cut taxes, so there's no reason to get out of anything right now. Let's just roll. So we jumped in and focused on that. And then you're talking literally it's 2020. Um, and I'm sitting on Twitter and I see this tweet from a friend of mine who's a doctor, and he's like, "There's this virus in China. It's crazy." So I started digging into it, and I was like, "Well, this could be ugly." And I'm like, "I'm gonna short the market. I'm gonna
Okay.
short booze, and we're gonna just get out of my longs, and we're gonna take profit and flip." Um, and then COVID hit,
Yep.
and we put everything for the brewery on hold. We had literally had a letter of intent to buy a building. We had a 10,000 square foot place picked out. We were negotiating on it. We walked on that. COVID hit. We shut down the school. We shut down my school food service business for 6 months. Because there was nothing we could do. The state
Yeah.
literally shut everything down. Um, the summertime came and they allowed people to have summer camp.
Okay.
And so I brought a couple of my guys back into the kitchen. We started servicing our customers. My wife kept her schools closed that summer. Um, we opened two of them out of the four. And then um, it became apparent that the kids weren't getting sick or they
Okay.
weren't suffering grave consequences.
Yeah.
So at that point, I was like, okay, it's old people, it's out of shape people, it's people with infirmities. It's not as bad as everyone's making it out to be. The Fed is now throwing trillions of dollars at this problem and just handing out money.
Yeah.
We're going to get inflation. I should buy real estate right now while I can because it's depressed because nobody wants to buy retail space.
Yep.
So we started looking around for property. My partner and I jumped back in. We found a place. We started doing some pro formas. We started doing some business plans, and we realized we didn't have enough cash.
Okay.
So we went searching. We put together business plans. We talked to everyone we knew. You want to invest? You want to do this? Everyone's like, "Yeah, out of your mind. I'm not investing in a restaurant in COVID. What are you out of you're fucking crazy."
Yeah.
So we 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 finally found an angel. The angel requires to be anonymous. But they did invent a major medical device 20 years ago that they're worth $1 billion. We went up to their house in Wisconsin and I brought food. My brewer bought beer. Um, we all got along great, and they said, "Okay, we'll see you with $500,000." So we had a
Yeah.
million
Nice.
capital. Yeah, so we had a million capital. We structured two LLCs, one to look for real estate, one for the business, and then we found an old firehouse that the
Okay.
village next door was selling. So we bought it and we went down that path of architectural plans, engineering plans, design plans, build out, and then inflation, and then the markets. But what can I tell you? That's my life story. We opened
Yeah.
we opened in October of last year with a soft open. We've been open for 4 months. We're getting really good reviews. It's Tonality Brewing Company in Mundelein, Illinois, for my little quick pitch there. Well, what can I tell you about what else I do?
Yeah. So it's a really interesting story, to be honest. And you like kind of feels like a lot of what's happened in your life is just, um, like you sort of mentioned, like you'd meet someone and all of a sudden a job pops up and then you bump into somebody and you become business partners with them. So like a lot of your life is just being happy circumstance and being willing to sort of take opportunities when they come in front of you. Is that sort of fair?
Yeah, that's very fair. I mean, I think there's some stresses in the middle of that probably didn't come across. Um, in 2001, when I left the floor, that was an extremely stressful period.
Mm.
So I had to focus on being an optimist and being creative and having fortitude. Um, I also had to have the courage to try something new.
Yep.
So that was very stressful. Um, Getting my butt kicked a couple times in the market was very
Mm.
stressful. It's never fun when you lose six figures.
No.
It's never fun when you have to pivot. It's never fun when you have to be humble. Um, and those I think are all key drivers to being able to successfully execute in the market. You
Yeah.
have to know when you're wrong. You have to know when you're humble.
Yep.
You otherwise you're just going to get humbled,
Yep.
which is even worse. Um, I mean, now my trading is very, very simple. I trade I trade balance.
Okay.
So right now I'm basing the ES off of quarterly expirations of the futures contracts and the year opening range. We've traded roughly 114, is it 116 or 160? I'm kind of distracted. We've traded roughly 160 point ranges on either side. So I
Okay.
usually expect whatever it does on the downside, it's going to do on the upside. You just got to find the pivot level. So I now trade um, ES from a longer position standpoint on swing trades, and
Okay.
I try to time turn times. So by that I mean I use different time frames with standard deviation channels
Yep.
um, to look for mean reversion and reversal, and then I look for it to extend and reverse the other way.
Yep.
So I might have an ES trade on for 3 weeks. I might have an ES trade on for a day. I never really know how it's going to play. Um, as far as SOFR markets, um, I'll trade the entire curve, but I specialize in the third and the fourth, maybe out into the reds or blues, depending on the timeline of what I expect the FOMC to do. Um, it's been very interesting watching people trade the SOFR market right now because it was so dead for so long
Mm.
that there's only a few people that have actually traded this market actively on desks.
Yeah. Okay.
So it's changed the way it used to trade.
Okay.
In the 90s and in the 2000s, there were really sharp guys on these desks. And I'm not saying people aren't smart on these desks, um, but they had a history and they
Yep.
didn't overreact. And what we've seen since 2022, when this Fed started the rate hikes, is we're seeing overreactions, right? We're seeing the market overreact. And that's been a really, really fun, profitable trade.
Okay.
They didn't anticipate the rate hikes coming. They didn't anticipate the severity of the rate hikes. Then they overreacted to the rate hikes. Um, I was tweeting with some guys this morning about March of 23, Fed fund rates versus the 2 year. That's on my timeline right now. That was a chart from what's his name? Bollinger. Tom Bollinger put it out. It's the Fed fund rates from 1991 relative to the 2-year, and how the 2-year is more, it's a better predictor of current and future trends than the Fed funds rate is, because the Fed is always behind the curve per se.
Yeah. Yeah. I think I've
Um,
seen that chart actually. Yeah.
yeah, it started diverging. It diverged in March, and the 2-year took the 2-year rallied to rates and then dropped it probably about 3/4, maybe a whole point, and then percentage rate, and then Fed continued to hike. So
Mm.
March of 23 was some pretty bloody market action. And then it went back up, rates went back up, and then yields started to really drop after that. I'm sorry. Then there was a period where rates went higher again
Yeah.
right after that. And then that rallied, rates rallied all the way, yields rallied all the way until October, when Janet Yellen decided she wanted to change the issuance curve.
Yep.
And that surprised the market. And we're back to trying to grapple with that. What's the outcome there? Are we going to get a Fed cut next week or tomorrow? What's Yellen going to do tomorrow? So it's been interesting. The SOFR market's literally just stuck in mud for the last 10 days. And we'll see. We'll get some resolution tomorrow.
Yeah. Okay.
We'll get some
And
resolution tomorrow.
what do you think about the whole sort of, there's a bit of a debate at the moment. Fed came out recently and updated their dot plot to 3 cuts this year, and the market's sort of been pricing somewhere between 5 and 6, depending on how,
Yeah,
where do you
market's
think
priced in
yeah, where
I
do you
mean,
think
if
we
you
land?
look at I think right now it's 3 cuts.
Okay.
I think right now we see 3 cuts in 24. Um, right now D SOFR is pricing roughly 113 bips. That's D's 4. I think that's aggressive. Um, especially with the economy where it's at, right? We saw a pretty solid labor number today. That would imply higher for longer. That's really been the argument, right? Is it higher for longer, or is it cut land?
Yep.
Which way is this going to pivot? I In the last 18 months, this is probably the most indecisive I've seen the market. Um, I mean, literally the move off of October in the 10-year and the 30-year, even the front end, was a pretty violent rip to the
Mm.
upside of optimism that we were going to get all these cuts. What's really notable to me is if you look at the SOFR curve and the reds and the reds and a little further out into 27, it's pretty much all the exact same price. See where it's at here. Let me pull that up real quick. Um, it's all 96, 66, 64, 62, 57, all the way out until June of 27. So they're literally thinking 3.43 is the actual landing spot for interest rates on the short end of the curve. But if you look at what is the real rate, R star, and I know that gets a lot of hate on Twitter, but
Mm.
if you look at the real rate of inflation right now, we're currently 300 basis points restrictive, which is the most restrictive we've been. But the economy's strong
Mm.
and the stock market's good. And you hear a lot about layoffs. But when I look at layoffs, I also look at the labor hoarding that was going on in COVID. So some of that is shedding the labor hoarding. Some of that is actual layoffs. But the things, the canaries in the coal mine, they haven't rolled over, right? I mean, we had Silicon Valley Bank, which started a whole lot of craziness, and everyone's like, KRE is going to die. Well, KRE is 52 in the low. It's up on the week, and its low was 35,
Yeah.
right? And it's, you know what I mean? It's like if you go back to the crash, it's a lower low. It's three consecutively higher lows in KRE regional banks from 20, 23, and then the second run down when everything went crazy in March into October. And now they look pretty solid in an upward channel. So if regional banks are okay, if credit card companies are okay, consumer confidence is okay and rising, um, the Fed could slow play some cuts.
Mm,
There's no need to get aggressive on cuts. So I think there's some room for SOFR to probably correct into that. Um, but then I think eventually you're going to see 3% 10-year at some point in time in the next 18 to 24 months
yeah.
because the Fed is going to not want to be restrictive.
Yeah.
And then we've got the election and then the election, and who knows? I mean, it seems like Trump's going to win in the US, but it's a really, 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 really weird market. I called it. I called Biden's win and pissed off a lot of friends when I said there was no way Trump was going to win re-election. Um, I still have that same feeling that there's a lot of people that don't want to vote for Donald Trump that just don't want to tell anyone they don't want to vote for Donald Trump.
Yeah.
So I wouldn't be surprised if this market gets some legs and rallies into the entire election.
Yeah.
It could be a false narrative, but I'm perfectly long. I'm perfectly happy scalping ES until the Fed lets us know its true intent.
Yeah.
I think the dot plots were a big surprise. I think Yellen was a bigger surprise.
Mm,
Um, Issuance yesterday was less than was expected. We'll see the makeup of that issuance tomorrow. We'll get the FOMC meetings tomorrow, and it's going to be an interesting run here. I'm
yeah.
looking forward to the opportunities. Right now, I'm long ES. I have no position in SOFR, and then I'm long some, some golden oldies. So a little bit of AI, a little bit of the fat kid shot. Um,
Yeah.
just the normal stuff.
Yeah. Cool. So then probably the big question I've got is just around obviously, that transition from being on the floor or in the pit to being behind a screen. And you sort of said that, the first time you tried to screen trade, it didn't work out too well. And, it took you a little while to sort of find your feet and get comfortable in front of the screen. What's what do you think like the biggest thing was that you had to learn about trading in front of the screen coming from the pit? Like what was the biggest change?
Um, okay, so on the floor, you knew where the volume was. You knew where support and resistance was. With the algos on the screen, you don't know that per se.
Yep.
Your best, for me, my best goal was to identify support and resistance levels. I just simple price levels, where the market lets me know where it's doing something. So I like quarterly expiration and quarterly opening ranges. Um, I learned to trade the opening range trade. If it's trending down on the opening range, there's a likelihood it's going to continue to trend down on the opening range. Off of that throughout the day, then there's consolidation days. Then there's reversal days. Reversal days usually come, and if you want to look at Twitter as a squawk box, you'll see adverse points of view on Twitter when you get into those potential reversal days, right? This is stupid. There's no way Yellen's going to do this. Yellen's not going to do that. Okay, you're probably at a point where people are trying to push it. Um, those are the days where you say, okay, you know what? We're consolidating. We've had a big run. I'm going to take some profit. Another thing I do now is once I've identified my price levels, um, I'm very cautious about maintaining my capital. I don't want to risk my money. So I'm assuming I can get the direction and the trend right, right? I can tell if it's a trend day or if it's a chop day. Um, if I can't, I'm out. Um, I will use my price levels to guide my entries and my exits. And then I will use my floor skills to maintain a positive to small loss on my stop positions. And I always use some form of a stop. It's
Okay.
either a mental stop or it's a physical stop in the market. I'm out if this happens because I am wrong. Um, I think the key to surviving long term is to preserve your capital. I think the key to surviving long term is to be flexible and mint when you're wrong. And then I think the way to make money is to push it when you're right.
Yeah.
So to give you an example, let me pull up the ES. Um, if you look at the ES for this week, let's go back 5 days. Oh,
Yeah.
just took a dump. Look at that. Um, the ES is literally trading in a choppy consolidating range from 48.74 to 49.34. I had 49.34 as a really key level. So I thought we were going to run for it. Poppy, hush. I thought we were going to run for 49.34. So I got long last week. When we went over 49.34, I sold 50% of my longs, booked a profit, let the market base. When the market based and consolidated, I bought another position. So I bought 50, I sold 25. The market based, I bought 50 more. And then I raised my stop to a break even above my combined new price.
Okay.
Kept my initial profit. Um, and then as the market rallied, I just clicked buy five, buy five, buy five, buy five, buy five. Every time it took out another level. When it got to point level 2, which is my price level for where I thought it was going to go next, which was basically 52 today, I sold the majority of the position. And then I was like, you know what? I don't know what the Ellen's going to do. I don't know what the FOMC is going to do. We still got earnings at the rest of the week. I'm going to raise my stop up. And I had raised my stop up to 49.42.
Okay.
And so I just got stopped out.
Yeah.
So I'm flat on the ES into tomorrow. So I will aggressively add to a winner. And
Okay.
I don't think people do that. You could do it off of standard deviations. I also really, really, really like standard deviation channels on tick charts. I
Okay.
grew up charting point and figure charts, right? The old 1 by 3, 1 by 10, whatever, 2 by 10, 3 by 10. Um, Tick charts to me, I think the ES on a 5,000 tick chart on a 5 day with a 200 day, a 21 day, and a 13 day moving average give you some real interesting data points for price action. If you look at a standard deviation price channel, it's going to give you the trend. If you have a 200 bar on that, it's going to show you the trend within the trend, right? Because your standard deviation is going to capture the entire data set. So if you've got a standard deviation channel going up with 2, 1, 0, -1, -2, and you've got a rising 200, you got a rising 13, you got a rising 21 or 13, I'm sorry, 9 and a 21. If I've got all my moving averages and standard deviation channels moving up, just sell it when it touches the 2 standard deviation to the upside. Take some
Yeah.
profit. And then if it bounces back to 1 or 0, buy some more. You know what I mean? We tend to make it an emotional trade. We tend to be fearful. And I think that you got to eliminate that. You know, you probably can't be a really great long-term trader until you get your ass kicked a couple of times, but you really need to limit the fear. If this is not about fear, this is about I'm going to take the things that are in my favor and I'm going to use them to my advantage. I'm not going to make a giant macro call.
Yeah.
Um, I do think there are some people out there on Twitter that are fantastic. Pine Brook, David Cervantes is fantastic at macro. Um, Parker Ross is fantastic. Conks is amazing. Citrini's amazing. Um, these guys are really, really, really intelligent, and they should be followed. Um, but it's up to you. You know what I mean? It's up to you to find a system that works for you. You cannot rely or follow or piggyback on anyone because I have shitty trades.
Yeah.
I have shitty days. You know what I mean? And if you're uncomfortable following me, but you're following me because you think I'm, a guru, um, and then I blow one up, you're going to blow one up, and I'm probably going to get out of it better than you are. And
Yeah.
now all of a sudden you're like, well, I don't trust this guy, and he doesn't know anything, so I'm just going to blast him on Twitter. Well, you shouldn't have been following my trade in the first place. You
Yeah.
should have things that support your idea and your trade, and kind of go from there. I mean, you got to make your own trades. You got to have your own entry, your own exit, and you should have your exit for a loss and your profit before you enter the trade.
Yeah. It feels like trading, although, obviously people like, even if you're trading the same instruments or even if you're doing a very similar trade, trading is such an individual uh, activity. Like your way of trading is very different from mine, is very different from the next person. And you've kind of got to go through a process of figuring out what your style is and what works for you. Um, yeah, as opposed to just sort of blindly following, someone because, they're on TV or on Twitter or whatever it might be.
Right? It's really funny you say that because back in the day, Tudor Jones used to walk onto the floor every now and then, right? And everyone's like, "Fucking Tudor Jones, it's Paul Tudor Jones." And then there was that documentary, and he was talking about Elliott wave. And then all of a sudden, everybody's into Elliott wave theories. All right, it's like I need to learn Elliott wave theory. Paul Tudor Jones is doing Elliott wave theories, and then it was artificial. Well, no, then it was neural networks, and you had to create a neural network in Excel. So in like 1994, which was my best year ever, it was the most volatile, chaotic time. It was very similar to the last 12 months, 18 months in stir. Very similar market action. Um, I set up a home computer and an office computer. They talked to each other via modem. I paid $12,000 for the 2 computers combined to get like 64 megs of freaking processing power on chips. Um, and I loaded Excel and TradeStation, and I hired a computer guy to build me a neural network. And um, we plugged in a bunch of different variables. We plugged in the S&P 500, we plugged in Treasury bills, T-bills, bonds, the whole 9 yards. We plugged everything in, and then we had our macro data that we added to it. And I would crunch these numbers. Literally, it would take all night to crunch the numbers. I'd go to the office, would crunch the numbers. I'd go home, I'd log in via modem, make sure it was still crunching. Excel was running the program, and then would get price levels and buy and sell levels for the next day.
Okay.
And then I would load it, and then I would load it into TradeStation, and I had a pinging me to a Motorola pager in the pit. So if I got a ping, I'd pull out my pager, cell signal. These T-bills. Okay. Sell signal. March Eurodollars. And then I would go and manage my position. And all I realized we were doing, it was hysterical. I mean, I'm like a year into this project. I got so much time and attention invested into this thing. Um, and all I realized is I was just getting quarterly opening ranges for the futures markets. I was just getting price levels. And I could literally look at the chart and go, oh, that's a price level. The market really reacted to that price level. If we get through there, we're probably going to continue. If that gets kicked back and refused, we're probably going to reverse. So I had spent a ton of money and a ton of time trying to get really fancy and cute and getting, I mean, Tom DeMark signals, Elliott wave signals, all of this stuff. And what it really was you got to know when the market's, you've got to develop your own internal feel.
Mm.
And then you got to take your shot, but you can't get your ass kicked,
Yeah.
And I mean, it starts with an idea. It always starts with an idea, just like me starting the Montessori school, or me starting the food service business, or me starting the brewery. I like this idea. I think I can execute on this idea. I'm going to execute on this deal. There's might have been 1,000 other, 100 other deals I didn't
Mm.
interact on or jump in on. You know what I mean?
Yeah.
So you've got to trust your instincts a little bit. So maybe the hardest part of transitioning off the floor was learning how to define or design a set of skills that would allow you to trust your instincts
Mm.
and then say, well, if this happens, I'm wrong. I'm out.
Yeah.
Right.
Interesting.
So a lot of intuition into it, but a lot of input into the old man's neural network along the way, maybe.
Yeah, yeah, yeah. I can
So
imagine. All right, so a couple of quick questions before we wrap up. Just something a
shoot.
bit more lighthearted. So, if you could give us your best trade and your worst trade ever.
Oh, it's the same trade.
Okay.
It's the exact same trade. It was 1994. It was an unemployment report. Um, the Eurodollars, the number came out strong. The Eurodollars dropped about 10 ticks. I was short probably 200, maybe 300. And so I had a really, really nice trade going. Um, Broker on the other side of the pit asks for a market. And I said, 5 bid. And he said, 2,000. So now I'm long 1,800, whatever it was. The market drops 10 ticks. I am literally down solid 6 figures. He looks back at me and says, do you want any more? And I'm like, oh God, I'm gonna average this fucking trade. And I said, yeah, 10 bid for 2,000, and he's sold. And I'm like, in the meantime, I'm literally flagging guys in the front month and the back month, Eurodollars. And I'm like, sell 500, sell 1,000, sell 1,000. I don't care. Market, market, market. At some point in time, I did the math. I was down about 800 grand. And I had 12,000 Eurodollars on, and I was spread front, back, anywhere I could get any traction. I didn't leave the pit. I traded all day. I traded like 60,000 Eurodollar contracts that day. And I ended up down like $1,000 with $40,000 in commissions paid.
Nice.
And I was like, this is the greatest trade ever. I literally just lost 6 figures and made 6 figures. And I'm gonna go home and take a shower and go to sleep and
Yeah,
cry
yeah,
for
yeah.
a couple of days.
That sounds like
So
a
my
big,
best
big
trade
game.
ever was my worst trade ever. Yes. I made the single worst mistake of putting no number on it, taking because if you didn't put a number on it in the floor, you took whatever they sold you. Um, and then I traded out of it.
Nice.
And then I realized nobody could really hurt me anymore.
Yeah.
But dude, I think I lost like 12 pounds, sweated out.
Yeah.
It
Yeah.
was it was it was insane. I was lucky I did not go out and just get totally screwed that day.
Yeah.
Totally screwed that day.
Yeah.
All right,
Yeah.
next question.
Could have gone the other way. All right. Probably a follow-up question. What did you learn from that experience? You might have answered it already, but what did you kind of learn from that trade? That no one could hurt you?
There, no one can hurt me. Only I can hurt myself. The other thing I learned from that trade is there is an instinctual part of you, a sub, not sure where it would be in the brain, but there is a part of you that will just take over at moments of stress. And whether it's fear of flight or fear of fight, um, y at those moments, you've got to trust your gut. You've got to do the things no one else is willing to do to get the things that everyone wants. Or
Yeah.
you've got to do that thing that just you got to swallow it and say, this is what I got to do. This is it. That's wrong. This is right. Boom. And that's that's instinct, but it's
Mm,
also learned experience.
mm,
So for a young trader to do that, that's never had that opportunity, that's a horrible idea. But if you've been in the arena, if you've been in the game, if you had some experience, you got to trust your gut at moments like that. And
yeah.
I'm not advising anyone to add to losers. I'm not advising that. Um, but I'll tell you, I've done it.
Yeah.
Um, and I'll tell you, it saved my ass, right?
Yeah.
So, that was, but it was a different world, right? I mean, everybody in the world knew what my position was that day.
Mm,
They were even talking about it in New York on trading desks. They're
yeah.
like,
Okay.
"Oh, DCP screwed. He's screwed. Who sold it to him? Oh, Bear Stearns sold it to him. He's screwed. Okay. Yeah, everybody in the pit knew what was going on that day.
Yeah.
It was
Right.
ugly, right?
Um.
I'm gonna plug a friend of mine real quick.
Yeah.
Point and Figure at Point and Figure on Twitter is a friend of mine. I used to stand across from him all the time in the third and fourth month Eurodollars. He just wrote a really cool Substack on what it's like to be in the pit.
Okay.
So that would be something of fun for some of the viewers to go see.
Yeah. Cool. All right. So someone comes up to you in college, just out of college, whatever, no idea what's going on, wants to get into trading. They've sort of heard about this trading thing and wants to get involved. What advice would you give to them, like in terms of where to start and how to find their feet?
Do they want do they want to trade for somebody else? Do they want to work or do they want to trade for their own account?
Probably trade for their own account. Let's say that.
Somebody wants to work for their own account. They need to develop a trading strategy. They need to paper trade that strategy. They need to find the flaws in that strategy, and then they need to find a couple other things that they can look at. Are you a macro trader? Are you a technical trader? You've got to define it. What is your personality type? Are you a risk taker? Are you a cowboy? Are you conservative? Um, are you the guy that could walk up to the plate and hit a cricket or hit a baseball when it mattered? Were you the guy that could catch the pass? Were you the guy that just was responsible and delivered your work on time and exceeded and excelled in your classroom work, in your school work? Um, what's your personality type?
Yeah.
Um, I mean, if you don't know yourself, there's no way you're gonna get to where you want to be with the least amount of trouble. You're going to encounter more trouble. So you've got to know you. The hard part is I didn't know me per se when I walked on the floor. I was a young kid. I couldn't grow a beard. I couldn't drink a beer. I mean, we literally had My company that I worked for had a skybox at Soldier Field for the Bears Super Bowl run.
Yep.
And I got to take the literally Charlie from the desk as a guest to the skybox. I couldn't even drink. I was 20 years old, right? I'm 20 years old in a snowmobile suit with a Hawaiian shirt on, drinking beer with the guy that's running a $10 million a year Solomon Brothers trading desk in the T-bill Eurodollar pit, and a guy that's been a bellies broker for 25 years and owns his own clearing firm. You know what I mean? So it's like, what did I know? Well, at that point, I was fake it until you make it.
Yep.
Um, be bravado. But that didn't work out when I got into the pit and I had to make it function. It got me to where I needed to, it got me to the opportunity spot. It got me to the next level, but I didn't know how to be successful. I didn't know how to be consistent. So I would say consistently managing your losers, finding a system that fits your style, finding a market that fits your style, and then figuring out how to exploit that to your profitability. And then most importantly, maintaining a level head.
Yeah. Okay.
Don't let your success go to your head.
Yeah.
Every time I let my success go to my head, every time I said 5 bid for 2,000, I got crushed.
Yeah.
If I had said 5 bid for 200, I'd had a $25,000, $30,000 day and it would have been fabulous. You know what I mean? Instead, I'm down a $500,000, $700,000, and I'm fighting for my life.
Yeah.
Um, and I had just had my second kid. I had just bought a house. So that's the other thing. If you buy something bigger, you have a kid, be really conservative for a little while because the odds are good karma's coming for you.
Yeah.
Don't
Yeah.
don't step out after you do something like that because you're probably just going to get crushed to see if you can hold and see if you can do it.
That's a good point, actually. I think the world does work like that sometimes.
Oh yeah. Oh yeah. Karma's a bitch, man. It comes back hard. But
Yeah.
sometimes it's beautiful. You
Yeah,
know what I
that's
mean? So
true.
and spread kindness, right? I mean, my tagline on Twitter is do the right thing, be a good person. Cheers. I
Yeah.
mean, I've seen every type of individual on this planet and all of them on the floor at once. Um, so kindness is a really cool way to go.
Yeah, for sure. So if people watch the pod and want to reach out or have any questions or something like that, what's the best place to find you? Just on Twitter? What's your Twitter handle?
My Twitter handle is at DCP Cooks.
Cool.
I think it's on the top of the Zoom chat. There it is right
Yeah,
there.
yeah, it is. It is there, and I'll post a link to it in the comments on the video so that if anyone wants to reach out, they can. Look,
Sure.
to be honest, I've really enjoyed the chat. I wasn't entirely sure what I was in for, and I've really enjoyed your stories and your honesty. To be honest, it's quite clear that you're quite an honest and sort of kind person. So that really comes across. So I've really enjoyed the chat, and I appreciate you coming on the show.
Thanks much. I really appreciate it. It's great to meet you.
No problem. All right, thanks everyone for watching. Once again, please like and subscribe, and we'll catch you next time. Thanks. Bye bye.